The date is March 7th, 2026. 1 week ago, a gallon of fuel in the United States cost less than $3. Today, that same gallon is reaching for the $4 mark, and it's climbing by the hour. This is the global energy shock, an economic shift triggered by the events of Operation Epic Fury and the resulting restrictions in the Strait of Hormuz. When the regional authorities indicated that transit through the strait would be limited, the world didn't just lose a shipping lane. It lost nearly 20% of its daily energy supply. In the financial hubs of London and New York, the data is turning critical. Brent Crude, the global benchmark for energy, has surged from $70 to $90 a barrel in just 7 days. Analysts from major global banks are issuing a serious warning. If the passage doesn't stabilize within the next 30 days, we could be looking at triple-digit prices. But the real crisis isn't just about the gas pump. It's about the power grid and industrial heating. Europe, which has worked for years to diversify its energy sources, is now facing a massive supply disruption. Natural gas prices have doubled since Monday, placing a heavy burden on the manufacturing sector. In the industrial centers of Germany and France, factories are already adjusting their production schedules to manage rising operational costs. But the most significant impact is being felt in the East, India, and China. The twin engines of global growth are the most exposed to this shift. India relies on this specific maritime route for over 60% of its imports. Every major price increase in crude oil places immediate pressure on the national inflation rate. In Shanghai, the screens at the financial exchanges show commodity futures rising sharply. China sources nearly 40% of its oil and a third of its liquefied natural gas through this single choke point. Without a steady flow of energy, the world's factory faces a potential slowdown. So, who remains stable in this environment? Interestingly, the United States, despite the geopolitical tensions, is more resilient than most. As a leading energy producer, its domestic supply acts as a strategic buffer. However, the cost of living increase at home is a challenge that will define the current political landscape. Meanwhile, investors are seeking safety. Gold prices have reached record highs, becoming the ultimate safe haven as the world watches the horizon. The reality is clear. The era of low-cost energy is being challenged. From Mumbai to Tokyo and London to Los Angeles, the lesson is profound. No matter how digital our world becomes, we are still deeply connected to the physical reality of the sea. As the global community works to secure these waters, the question is no longer if the economy will be affected, but how it will adapt to this new reality. This concludes our analysis of the Strait of Hormuz crisis. Stay informed, stay ahead. Knowledge is your best asset in an uncertain world. Don't forget to subscribe for our next deep dive.